Welcome to another episode of Leaders in Lending. I'm your host, Matt Snow. This week, I'm joined by Eric Fiala, the Chief Corporate Responsibility Officer for KeyBank and also the CEO of the Key Foundation. Eric, thanks for joining.
Yeah, happy to be here. Thanks for having me, Matt.
Absolutely. So maybe get started by telling me a little bit about how you ended up in those positions. I think some previous guests, we talk about, banking isn't the thing you dream up enjoy, doing as a kid, and it's kind of an accidental career, but maybe lead me through how you got to those roles at KeyBank.
Yeah, happy to. So I actually started at Key as an intern, graduated with a finance degree, and spent 10 years here in our corporate finance team. I was had a few different positions there, but was the CFO for our consumer banking business. So really our branch-based business. And then ultimately left that role to lead our business analytics function, which was everything from market research to marketing analytics, customer targeting, and ultimately wanted to do something that resonated with me a bit more personally, and raised my hand to move into what we called our corporate responsibility function, and have been there since. And so I ultimately started leading the function in kind of early 2021, late 2020. And again, just feel like I'm doing the right work, the work I was meant to do in the place I was meant to do it. And so been a long journey, over 22 years now at Key, with a little bit of background that really helps me understand our clients, understand our businesses, but then translate it into how do we leverage that information to bring our purpose and values to life?
Great. Yeah, that is quite a journey. And I would imagine the analytics background could help you in this space. I want to maybe come back to that, an area that can be ambiguous around, the CRA, or how do you help in a community? How do you even measure that? Seems like that would be a really interesting combination of skills to bring to that role.
Yeah, absolutely. I think, we start, as most do, by measuring, the activities. So what are the, number of dollars we're putting in a market, the number of loans, in each of the communities we serve. But I think where we are focused now is really on the transition to understanding the impact of those. And so thinking of it, not just as a loan, but as, creating a new homeowner, someone who can build generational wealth over time. And what does that look like? As we implement new programs, how does that change, the trajectory of our business relative to where it's been before? And I think, other things like our philanthropic investments or grants, with our larger grants, we work with the receiving organizations to really understand the targeted outcomes that they're looking to have. And then we check in with them regularly to understand, are the investments we're making driving the outcomes? And that can be, through things like food service, financial education, scholarship support, et cetera. There's a number, but then trying to pull that all back in together to really help tell the story and understand how those outcomes should shape our investments going forward. I think that's really the next turn for us.
Yeah, that's a great point. And being a data person myself, it's easy to get focused on the number and try to think about the scale or the return or those metrics. But I think it's really important to always come back to those stories, like you were saying. Like, these are people you're directly impacting and stories you're helping improve. And I think in financial services, we have a great opportunity, responsibility to do that in the right way. So always good to anchor back to that. And it got me thinking about an earlier conversation we were having and kind of getting ready for this recording about, the role of a bank in a community and how that's changed over hundreds of years. Even to the point I can remember, it's kind of a Christmas tradition for my wife and I to watch It's a Wonderful Life. I don't know if that has a warm spot in your heart as being someone in banking for a long time. But how, what are the things that you've seen over your career in terms of how a bank functions in a community, the role it plays, whether just by the nature of being a bank and having a physical presence, or being involved in the financial well-being of those community members?
Yeah, so I think nearly every major, if not every major life event or impact has an associated financial implication, whether that's, having a child, sending someone off to college, buying your first home, starting a business. There is a financial component to each of those types of events. And I would say, um, you know, banks have the unique role of helping people through those, helping people understand the implications on their, long-term financial situation, as those life events occur, and to help prepare for those over the course of time. I think what's perhaps changed about the role of banking, or maybe is more of a focus today than it has been historically, is around really understanding communities from a systems perspective, and identifying opportunities that the bank can play in supporting a stronger, kind of more thriving ecosystem for our neighbors and our neighborhoods. I think whether that's looking at broader based kind of economic or demographic data, understanding local government priorities and initiatives that are really rooted in the needs of the community. I think that's where the role of banking has changed, and how do we come together, often, frankly, in the industry as partners, to support local efforts that are trying to drive some of the systems change to help create the thriving communities that we all want to be a part of.
Yeah, that's interesting. And I've had a couple other guests on, and we've talked about maybe at a more national level some of those changes, or working with agencies or collaboration and figuring out trade groups or associations and ways to do that. But so how do you do that at a local level? That's a good point about the systems and the local governments and kind of the infrastructure that develops to solve those immediate needs. Seems like there could be a lot of nuance and differentiation depending on the size of the community, the rural or urban nature of those communities. How do you get into the DNA of those local areas?
Yeah, so I think it starts first and foremost with listening. You know, first with clients. What are they telling you? What are the people you're working with or that are coming into your branches every day saying about the community where they live? I think the other piece of it is, we work to establish community partnerships. So people that we know, are very focused on serving the needs of the communities, understanding what they're saying, what they're seeing, and then what they're doing to address some of those issues, and really thinking through that with the lens of where might we be able to play a role to help support. I think, whether it's community listening sessions, again, looking at just some of the demographic trends, those are all helpful. The other thing I would say is really making sure that for us, we're involved with local government, understanding many cities have plans and priorities. They're making investments to address the most critical needs within a community. And so really having a perspective on what's happening there, and, city councils and county councils and others helps us understand, what do the leaders in a local community see as being the priorities or priority issues within a given community.
Yeah, and you mentioned using kind of the branch as a channel for gathering some of that feedback. That's interesting. Have you seen that change, or the way consumers are using branches now versus even pre-COVID? Was there a dramatic shift for you guys in that perspective? And how do you think about like digital channels and keeping in touch with customers?
Yeah, so I think our trends are similar to others. I think we're seeing in-branch transactions decline. That said, I would go back to my earlier point, which is when the life events happen, I think people still desire to have an in-person interaction, to sit kind of shoulder to shoulder with someone and talk through what they're facing, what their questions are, what they're thinking about. And so in those most pivotal moments in someone's life, I still think people are coming into branches to have those conversations.
It's funny because I was reading an article recently about where do people go for financial advice. Again, thinking about how the role of a bank or a branch has changed and evolved over the course of time. it was about half of the people that were surveyed. This was a bank rate survey from last year, had sought some kind of financial advice in the past year. The number one area was friends and family where they got that advice. But then I thought what was kind of crazy was similar ratio sought advice from financial advisors versus social media. Um, I would argue maybe there's more veracity in one of those channels versus the other. But uh, does that resonate with what you've seen, or what kind of things are people coming to the bank for advice for? How are they solving these problems?
Yeah, I think it runs the gamut really of, I would like to buy, my first home, but I don't know, if I'm prepared to do that financially. I don't know, do I have enough uh, of a down payment saved, or what's the monthly payment going to be, or sending my, kids to college, and how am I going to support them over time, or, having a baby and want to start saving. Or I think, the other thing we hear and see is just how do I withstand some sort of financial emergency or shock. Unexpectedly need a new car, or medical expenses are another big one, or caring for aging parents. And I think so. There's definitely no one size fits all solution. I think it's how do you make people, in particular, um, people that have not necessarily had that kind of history of trust with financial institutions, how do you welcome them in a way, that feels good to them, where you can start to build trust and, help them work through those problems or, questions over the course of time.
Gotcha. Anything innovative that you guys are working on, or trying to use new technology or even AI? I know that seems to be a big topic lately, whether it's large, language models, kind of those learning from your data. Anything you guys are working on in that space?
Yeah, I'm not well versed in our AI capabilities, but I think some of the things that we're doing around building trust in communities are finding new ways to bring the bank to the community. And so historically, I think we may have relied more heavily on foot traffic, people coming in or calling in with questions. And now we're looking at ways we can help people understand what our capabilities are and build those relationships before they ever set foot in a branch. And so I think one of those is we're working with a company called Mocafy to bring kind of banking clinics to different parts of the neighborhood, to historically underserved neighborhoods. And they are in places, that are central to a community, generally community gathering spots. And we're saying, here's a topic, for example, we're going to talk to, we're going to host a session that's focused on the Black beauty industry, and, help people understand that are running salons or other things, potentially out of their home. What opportunities exist for them to grow their business? What are some of the basics you'd want to put in place? And we have products and services that can help with that. The partner we're working with, Mocafy, does as well. And then we also bring to those conversations other community organizations that can help those participants understand what are some of the other services and capabilities available to them within a market. In certain cases, we've brought our branch managers to conduct individual financial wellness reviews, where someone can do that without ever having to step foot in a branch. They get to go to a place where they're comfortable with. They get to be with people that they're comfortable with, and really start to build that relationship over time.
Wow, that sounds like a really interesting approach, kind of meeting people where they are, and you guys playing facilitator or a hub for other services they maybe wouldn't have otherwise known. Is that something you have rolled out widely, or just kind of testing now?
I would say more in the test phases. So we've hosted 3 or 4 events so far, but they've been really successful. People have been very pleased with the outcomes. And I think what we found is that in certain cases, the more targeted topics are really well received. People want to know that they're going to come and hear information that's relevant to their specific situation.
Okay, great. Well, I'd be curious to hear how that goes. Um, maybe pivoting a little bit, because I know when we talked before more about the Community Reinvestment Act, some changes to that last year that are rolling out this year, hopefully brings more transparency and ease of kind of managing that system. How's that been for you guys in terms of managing that transition?
Good. I think what we are looking at early on is any major technology changes we would have to make to track information and data differently. But beyond that, I think outside of the administration of it, there are some really exciting changes to what qualifies as community development. I think some more specificity, and so ultimately, we're really pleased to see that a set of activities will count, if you will, towards the CRA in places that are really needed. So the addition of climate resilience initiatives in low income communities. I think more specific call outs for support of minority depository institutions or community development financial institutions are places where we have been investing over time, and that clarity of the community development purpose should help to expand investments that are needed across the country.
Yeah, I totally agree. And I think there's even some of those changes maybe help with the idea of the assessment area, or including the idea that there's maybe a digital footprint as well as a physical footprint within a bank's network, right?
Yeah, absolutely.
So you mentioned a few others. It's going to turn into like an alphabet soup here with MDI, CDFI, and CRA. Maybe talk a little bit more about your involvement with those types of institutions, or maybe even start with what is a MDI or a CDFI?
Yeah, so an MDI is a minority depository institution. It is a bank that is more than 50% owner controlled by minorities, and a community development financial institution, or CDFI, is an organization that is a certified community development lender that really is looking to kind of close the gap between where traditional financial services start. So, predominantly serves historically underrepresented or vulnerable communities. Our work with CDFIs and MDIs has really grown, I think, over the past couple of years. Namely, the major item I would highlight is that we have placed $50 million of deposits with minority deposit institutions as part of a commitment we made, being a founding member of something called, more alphabet soup for you, the EOC, the Economic Opportunity Coalition. And what's important about those deposits is that during the pandemic, many MDIs received one-time funding to make additional loans in communities where they were really needed. But to do that and to lever those investments up, it was important that those MDIs had a stable deposit base. And so what we can do is partner with the minority depository institutions to place deposits there that we know will be stable, that are below market rates, so they're a little bit cheaper. And those dollars then get levered up to make loans into communities where they're needed most.
That's great. What loans are those typically for? Are they small business? Are they consumer? How do those usually impact?
Both. It really depends on the focus area of the MDI, but I would say small business and mortgage lending are probably the two predominant categories.
Gotcha. Have you seen any of that change? It's been really interesting economic cycle that we're going through now. They all are, and have their own different flavors. Anything that you're seeing as rates change in terms of the types of products and services in these communities?
I think what I would highlight most in terms of where I'm seeing changes are, and part of it is rate driven. I think part of it is just general recognition of the need, but is around special purpose credit programs, in particular for mortgage lending. So Key has 3 special purpose credit programs. A number of banks out in markets have those programs. And that's really where you can offer favorable terms to historically underserved classes of people. And so I think some of those programs focus on, closing cost assistance. Some of them focus on down payment assistance. Others focus on rate buy downs for loans, which I think can help in this type of environment. I think, as an industry overall, we've seen mortgage lending in particular come down quite a bit from where it had been in 2020 and 21. But housing prices are still high, rates are still high. It's really, makes it much harder to get into a home. And I think some of these, products are trying to look at ways that we can make home ownership more affordable, not just at Key, but across the industry.
Yeah, definitely a hot topic, and try not to stray too deep into politics, but even was reading today about some of the proposals, maybe from Kamala Harris around a $25,000 down payment assistance for new home buyers. So I think the pressures around home ownership definitely are being felt across the nation, and I think there's always room for innovation. And how do you make that more affordable, easier for all folks, because it's a huge generational wealth driver, an important part of growing and advancing communities and individuals in the U.S.
Yeah, and over time, I think there's such a long-term aspect to it that we have to keep our eyes on.
Yeah, absolutely. What else are you seeing in terms of regulation change, things that are on your mind that you're trying to kind of keep aware of that maybe potentially can impact Key's business?
Yeah, so maybe less on the bank regulatory side, but I think one of the things that we are seeing across the country are mandates around financial education as part of school curriculums or curricula as graduation requirements. And in many cases, those mandates may be unfunded. And so I think we are seeing a greater need for financial education, high school students and up, and even in certain cases, even earlier, that we're really starting to think through how is that, a need that we can help meet in our communities.
Oh, interesting. So what are ways that you're thinking of doing that? Is that through curriculum or having folks in schools, or what are some of the things you're thinking of?
Yeah, so we historically have done financial education, on an as needed basis, or when someone would, request it, we would, find someone who could go deliver. And actually it was a series we did at a local high school here in Cleveland that got us thinking about the creation of a more established financial education and empowerment program. And so in April of this year, we launched a new financial education program that we call Money, Me, and Key. And that is there are 22 modules that are part of that curriculum. They don't have to build on one another. So it can be, basics of budgeting, how to establish an emergency savings account, to, opening a business or buying a home, whatever is relevant for the audience. And actually that program will start, not in schools, but working with the many community partners we have across our footprint. But what's unique about the model for us this time is that, we have asked our teammates to sign up to become what we are calling money mentors. And those money mentors go through a facilitation course and ultimately get certified before we can send them out, an internal certification, but before we send them out in communities to deliver that education. And I would tell you, after, our launch, we had about 600 of our teammates sign up to be money mentors. And I think they're really looking forward, as more requests come in, to getting out and delivering that education in community.
Oh, that's great. And it goes back to, what I was thinking about earlier around where do people get advice. So this seems like a really positive, proactive way that you guys are getting out there. Like the idea of internal certification, getting people prepared. Like, Are there certain topics, or where have you seen the biggest gap in terms of that, just like basic financial knowledge and education that a general consumer has? And or is it like you said, it's not a one size fits all? Maybe there's different life events that trigger different needs, or just how to manage and navigate a certain product.
I think it's uh, probably the two topics we've seen most requested are just a basic class. Tell me about banking. Tell me about some of the products and services that are available. How are they used? What are they used for? And how might they benefit me? That and then home ownership. That is always a question. I think, given some of our earlier conversation, such an important topic, really across the country. I think folks want to understand how do I own a home and build wealth over time. And then actually I would add a third onto that comment, which is we are hearing a lot more interest lately in estate planning, how to think about end of life issues, and making sure that as you grow and build wealth over time, that you're doing your very best and kind of everything you can do to pass along that wealth to future generations.
Yeah, that's actually a great point. I hadn't thought of that. The banking ecosystem can be complex enough, but layer on top of that the legal system, and that's almost impossible for any person off the street to navigate themselves. Eric, I appreciate the time today. Is there anything else we haven't covered, maybe that you wanted to highlight?
I think we've covered a lot of ground in a short period of time. I just think maybe one of the things I would highlight is the importance of building partnerships. There are so many organizations across the country doing phenomenal work that reach really deeply into communities and help expand. Have the potential to help to expand your own reach. And so I think for us, those partners are critical for us in terms of meeting communities where they are, understanding their needs, and frankly holding us accountable to what we can and need to be doing better.
Great. Yeah, I couldn't agree more. And as we've talked about, this world is complex and growing more so by the day. Are there any other podcasts you listen to, authors you like, industry publications that help keep you up to date that you would want to share?
Maybe a little bit of a different answer to your question.
All right.
So I talked earlier about, understanding, local plans. I would say read local news, follow elected officials on their social media accounts and understand what the priorities of local governments are. I think, read the city plans and really think through, what are those plans telling you about the needs in a community? And so I think it's not just one source, but several sources that get you closer to what's happening, on the ground and what are important to the people of each individual community.
All right. Great pivot. I like that advice. Well, thanks again for joining, Eric.
Yeah, happy to be here. Thanks, Matt.